Delta Airlines, DAL, with their hub in Atlanta, Georgia. I have family that lives near the Delta hub. So, um, all four of these Warren Buffett airlines have made it into the top 10 most popular stocks right now. So we're gonna do DAL. That is an ugly DAL. I took a look at their balance sheets. Let's look at their prices, fundamentals. Well, this is going to be a great video, guys. This is going to be so good. This is Brian Lewis with MMT Investing. Things just changed. So, all right, let's do this little drawing here. So, in the general S&P, we get this kind of 1, 2, 3 Elliott wave down, and then we get a 1, 2, 3, 4, 5 Elliott wave up. And then we're looking at possible another 1, 2, 3 correction wave to the downside here. This is ABC, 1, 2, 3, 4, 5, ABC for the Elliots. And Delta is looking pretty similar to the other airline stocks. And I just mentioned Warren Buffett a bunch of times in the last couple of videos, and I'm going to do it again. Because this is one of the stocks that Delta, oh man, this is one of the stocks that Warren Buffett has just sold every penny of. Delta was one of his big ones. He had about 12% of ownership of Delta Airlines about 2 months ago. And as of yesterday in the shareholder meeting, or 2 days ago, Warren Buffett has just announced to his shareholders that he has dumped 100% of all of his airline stocks. First and foremost, Delta, because that was the big one that he had to sell down. Delta, a couple percent of the Delta in this area during the crash. Warren Buffett sold Delta down from 12% to under 10%, so that for the rest of this down cycle, he would not have to report any of his trades for those holdings for the rest of to the SEC, because if you have more than 10% of a stock, you have to report your trades to SEC, and they're basically public. And once you get below 10%, you can do whatever you want without reporting it. But then, of course, he has to do the shareholder meeting update. And so now it is public news that he owns 0% of Delta, United, Southwest, or American Airlines. Yeah, those are the four. So, and all four of those are in these top most popular stocks. And all four of those, smash that like button right now to help me out with the YouTube algorithm. So let's take a look at some technicals, I guess. Now, I did look at their balance sheet. It's about two gazillion cash to about 2 gazillion debt, which is not awesome. It's about square, and assets to liabilities is square also. So it's not a bad balance sheet that looks like immediate trouble. Let's do the fundamentals. So a lot of these stocks in every sector, regardless of if they're going up or down, are getting these kind of wedge patterns with a breakout to the downside, and that looks like a bear pennant that has just broken out down across 80 stocks, across all 10 of the sector ETFs. Everything, the S&P is doing it. Everything is doing that kind of movement right now, and it looks like it's just a simple Elliott wave reversal pattern, which is just the A, B, and C kind of Elliott wave, and it's just the B wave reversing into the C. So that's kind of the fundamental outlook. Doesn't look very good. The balance sheet looks okay, or sorry, the technical outlook. The fundamentals, the balance sheet doesn't look scary yet, but it's very expensive to maintain these airlines, and they're just not getting passengers. And as Warren Buffett was saying, even if the airlines get up to 80% occupancy pretty soon, they still have to pay for 100% of the airline maintenance costs. And that's why he thinks these are a bad value investment right now. So he says this is why he is getting rid of all the airline stocks, just because of value investing principles. But for me, I suspect that he thinks something else is going on here. And he, well, I don't want to say what he thinks, but I think there's a possibility that these airlines could either go bankrupt and not get a bailout, or they could get nationalized, possibly. Some kind of scenario that you don't want to be holding these things. And so this is, I forget which one this is, number 4, I guess. I think this is the number 4 most popular stock at the moment. And I want no part of it. No part. No, thank you. Not to the short side either, just because it's so low. Even if it looks like a good time to short it, I don't know. I mean, I guess if there's a risk of bankruptcy, it could be a good short, but I would rather short stuff that's kind of coming down off a higher point than try to short something that might go down a little bit. And who knows what this will do? I mean, from 22, if it gets to 10, like that's a 50% drop, you know? So, or is it not around 20? Yeah, so it did the gap down. It's around 20 today. So, I mean, we might see some crazy swings in these kind of stocks like we saw in the USO oil fund a little while ago. So that's kind of the outlook on these airline stocks that Warren Buffett has been dumping and throwing in the dumpster and lighting the match, and and it's a dumpster fire, guys. This is scary stuff. Scary long. This is not investment advice. And I'll talk about a couple other things here because we have this cycle model where we get sort of a down and a bounce, like 3 or 4 month cycle. And at the end of this cycle, we're going to get out of this credit contraction phase that's really difficult to trade, and we're going to get into a credit expansion growth phase where it's much easier to trade, and that looks like it'll be out in June. And at that point, I still don't like the airlines, but I do like a lot of these other stocks like Tesla and GE that we're looking at now. And that's kind of the cycle outlook and the fundamentals of the airlines. I think I covered all that stuff. So like for top 10, when people are looking up top 10 stocks, they're talking about going long on a stock probably for a while. And this point here may be a good time to go long on some certain things. But if we switch into a longer term bear market, going long term value investing, even dividend investing is risky, and it's bad. If it's a long term bear market, all of those things just are terrible ideas. Um, so I did want to look at just a couple things like gold and the oil tankers. When we get these kind of reversals in the middle of this credit contraction cycle, have the potential to shoot up in the short term just for swing trading. And then there's a lot of stocks that could get a medium term kind of up here in the cycle switch on the 3 to 6 month kind of time horizon. But as far as like a 5 or 10 year kind of buy and hold, like those are far and few between. I mean, I'll look at some things like metallurgical coal, or like there's certain commodities that are really low right now that could be sort of mean reverted value investments. But these stocks in general that have huge debt and small profit and ridiculously high valuations, like that's not how value investing works. You don't want sky high valuations and a bunch of debt and risk in a value investment. You want a mean reverted bottom low price where it's hard for it to go anywhere but up from. And so just the couple of general ideas about investing. It's like if you're going to speculate, then speculate on the moves. If you're going to do a buy and hold value investment, then you want to get a value investment price. And that's what Warren Buffett is the best in the world at. And that is why he is selling these things right now and stockpiling cash. That should tell everybody something about where we are in the market and the cycle and the everything bubble. And I'll mention the oil tankers and the gold because I think those will be good here on the ups. So the oil tankers, like I've been looking at crude tankers like NAT and like DHL, like Nordic American tankers, the double hull tankers. And then also I've been looking at product tankers, which is a newer thing. And you can go check out my Buffett videos, my gold videos, my tanker videos, and see what like interesting stocks are actually doing in this crash versus the stocks that are just part of the S&P that are just following the normal crash shapes and things like that. But there's product tankers like Scorpio, the STNG symbol, that are not crude oil storage tankers, but they can convert their oil tanking ships, their product ships, into storing crude oil and get a huge boost off of this oil contango oversupply. So I've been looking at those kind of stocks a lot right now because those are interesting in this down cycle. Those are companies that have been up like over the entire course of the cycle, not like a little bit of up after a huge crash. Like those are up, like actually up from the top of the crash, like net long over the whole crash. And they're still doing these crash shapes, but they're doing it along and up. So those are stocks that are actually along in this cycle, whereas most of the cycle longs that you might expect in this kind of cycle, like healthcare and consumer staples and housing REITs and all those sort of things that usually do well in a crash, like those are not even doing well in this crash. But there's a few things that are: treasuries, DXY, these tankers, then like gold is doing pretty well. So how to trade those in this cycle? Go check out my videos. I've got a lot of interesting things, way more interesting than Delta Airlines, which is just absolutely a dumpster fire. So that's my opinion, and I'm gonna stick with it. This is not investment advice. Please hit the like button and happy trading.